All right, welcome everybody. How are you guys? Let's do a quick mic check. Alan, first week, welcome to the 5ers. Glad to have you on board. Enrique, how are you? Matias, buen dia. How are you? Morning. Glad. Okay, I believe you can hear me. I believe you can see me. From Thailand, welcome, and from Uruguay, welcome, guys. Welcome. Glad to have you, guys. My name is Saul. Welcome to the trading room. We before we get started, remember anything I say here, anything I show here, anything I do here is not meant to be a buy or sell signal. It's only the way I read the charts, see the markets, interact with the markets. If we have some time today, we might take some trades, and that's the way I manage trades and accounts. You should not be trying to follow along. Be responsible for your own trading. Let's have the attorneys happy. Okay. With that being said, let's as always on Mondays we want to go through a bit of the calendar and what can we expect of the fundamentals and how is that being reflected on the daily charts and long-term opportunities that we have along the week. And if after that we have a little bit of time, we might go to lower time frames and just do some trading. What do you think? Bob, how are you? Welcome. Digital finances, how are you? Okay. There's been some changes here on the layout. Elena, hi from Canada. Thanks for joining. So please let me know, guys, if you see now my calendar. Not sure what I'm showing right now. Maybe I need to do this. Yeah. Please, waiting for confirmation that you see my calendar right now. Wait. No calendar. Yes. What about now? Yes. Perfect. Fantastic. Okay. So there we have it. Okay. So, guys, crucial week in terms of fundamentals. Okay. Let's go through the through what we have, and already today we had the GDP on the pound. We'll see that on the chart didn't have a lot of impact. Okay, wasn't as far from the forecast, just 0.1 0.1% in difference. So we'll see how that would reflected on the calendar. But what I really want to take your focus is on two things during this week. The first one is on Wednesday, we have the France fund rate. Okay, so we have the FOMC interest rates and the expectation of a 0.5% increase in interest rate. But what's more important or more interesting is that a day before, tomorrow, we have the CPI. Now, lately, CPI has been like the main focus, more than NFP, more than anything. Everything has been focused on CPI, inflation reports in the US, because based on that we can get like an idea if we expect more interest rates or not. Okay, or we slow down with that. And so tomorrow, depending on if the final number will be close to the forecast, will determine probably if this is going to change. Okay, because there are some experts claiming that the increase might be not 0.5%, but 0.75%. So if that would be the case, we will see craziness along the charts. Okay, so have a look, and really important, the volatility that will come around the CPI numbers tomorrow, and the implication they will have on the interest rates. Okay, so if these numbers come close, okay, to the forecasted, we shouldn't have any news here on the increase on the interest rate. But if it's suddenly these is higher than expected, or whatever it is, okay, if inflation is higher than we expected, we might see a more aggressive increase in interest rates, okay? So that's key during this week, and you see more, red flags all across. So we have in euro a lot of important events, and we have the S&P policy rate as well for the franc, okay? So we also expect to increase the interest rate, but the franc doesn't affect the majors the same way the US does. So really stay focused on the US announcements. But of course, if you trade the Swiss franc, you want to have an eye open also over here. That will be on Thursday, and then Friday, what we have, flash services. Those, these events will bring some volatility to the market, but won't be as transcendental as the CPI, FOMC, and the Swiss franc. Now, last note on the FOMC: after the rate, we have the press conference, and the press conference tends to bring a lot of volatility, and we will really want to listen. We'll really want to get hints if, okay, let's say the final number will be 4.5. We really want to hear 4.5 is, that's the goal. Okay, we're going to stop there, and from there we're going to slow down, or we're going to stay there for a little bit, for a few months, or the final number. Okay, we want to get into 5% on the interest rate, or 6% in the interest rate. We would really like to get some hints, or where are we heading? Where are we trying to get with the interest rates? And investors and traders will be with their putting a lot of attention there to try to get those hints if the trend will continue to increase interest rates, or we're slowing down with that, to manage their positions. Okay, and so let's try to see how all this affecting the technicals. Okay, so let's jump into trading view, and we'll start with the dollar. Okay, so the first interesting thing about the dollar index is why, if we keep increasing interest rate, and the expectation is more inflation and more interest rates, and that brings demand to the dollar, why do we suddenly see this deep retracement on the dollar index? Okay, the weakness. And of course there's a lot of answers. At some point you say, okay, how far can we keep increasing interest rates? Okay, at some point you understand the implication of that on the US economy, of the possible recession on the US economy, and the decrease in intrinsic value of the US dollar, and people going off the US market, of the US dollar. We discussed some weeks ago about the efforts of having a more balanced, the US dollar, not as strong the US dollar in comparison to other currencies, especially to the euro and to the pound. The world debt quote in US dollars, and if we have a very strong dollars, the challenges that brings to emerging countries to pay back those debts. So a lot of efforts and a lot of interest, globally, to have a weaker US dollar. Okay, a very strong dollar is not good, not for the US economy, not for the global economy, and of course, people not believing on interest rates as being as efficient at certain point, and they start to balance their books and taking some money off the US dollar. So that's first thing. But technically, this I would interpret this as a retracement. Of course, there's a lot of supply here, and we'll do this analysis more on the US dollar. But you could find arguments to go long, to say, okay, that's the trend, that's a pullback, and we might continue to the upside, or this is the beginning of a down leg. Okay, we have a compression here. We'll see it on the euro dollar. Will be easier for me to explain it there, but a compression towards what could be a key level, and then a reaction from there. Other than that, I'll jump to the MT5, will be easier to explain everything there. So let's just do that. Okay, here we are. And we'll start with the Euro USD because it's like a mirror of the dollar index. So we touched parity a few weeks ago. Where's the parity level? Yeah, over there. And we were trading below parity, and we discussed all the implications, and we finally saw from this level an important impulse to the upside, and then what it seems to be like a compression. Okay, now this kind of movement is not a very strong movement. Usually this kind of pattern, when it meets strong supply, okay, so if we find a strong supply at the other side, okay, if price continues to press in that way and then meets a supply area, that tends to break to the downside, okay, in this case, because demand is being consumed across all the channel. So once we get to a point where in the past sellers were very interested in selling, so we can expect they will be willing to sell at the same levels, and they might push the market down. Now in some times, and this might be one of those times, just before tomorrow, or probably before Wednesday, we might get into the supply area, and at the supply area we will get those fundamental releases, the CPI or the FOMC, and from there all technicals disappear, all technicals fail, and from that area, okay, I believe we will keep compressing to that area, and at that area we'll get either the CPI or the FOMC statement, and from there we could see also, you know, a big explosion, a big breakout to the upside, and that would convert this area into what's called a swap area, which is previous supply. Now it will start behaving as a demand. Okay, we'll see a new demand area being created, and a big, you know, bullish movement, and then this area will turn into a demand area. So be careful there. Day trading, I really tend to be flat on those moments, but now we can see how, you know, the technicals will bring weak movements. Okay, there's not a lot of buyers, not a lot of sellers. Not a lot of, you know, decision in the market. It's a very balanced market. We see a bit more buyers because we see the direction to the upside, but towards this supply area, that's a area of interest, and at that point we'll get the fundamental release and the new trend, or the new leg for at least. So either a up leg or a down leg, and from there we'll need to react. If we get a down leg, I believe we'll see an important movement all the way to first that support, and second parity level, which is the demand area created there. Okay, we just where the movement was initiated. If we go to the upside, okay, if we break that area to the upside, then we don't have anything up to those levels there. So careful with your positioning and your trading around those areas. We'll see how, you know, how the market reacts, and that same pattern we'll see it across most of the pairs. We see how the pound is having a similar formation. Okay, we had what was the last swing, and we're pressing. You can see the compression if we analyze the channel. So we see how all supply and all demand is consumed, okay, inside the channel. Okay, just this little movement here created a little demand, which was checked. Okay, it was checked already. So if there's only an important movement to the downside, there will be no demand left to keep or prevent an important movement to the downside. So that's why, you know, these channels and these compressions are weak movements, and after those we tend to have very important movements either direction. So same pattern right here. I don't expect a lot of volatility or movement up until the releases tomorrow. Yen is kind of different story. We saw the sell-off of the dollar. The technicals here are kind of failing. Okay, if we just clean everything, if there was no news related, so we have the down movement, we had the the break to the downside, the retest of that area, and usually we tend to see a retest of those lows. And now we're just stuck in that sideways movement. It's hard to tell if this is going to create a new leg down, or this is just a new pivot, a higher low, to create a new movement to the upside. So again, it's sometimes you want to listen. Tell me this is going up or this is going down, but it's really hard to tell at these moments where the markets are heading. The announcements tomorrow and Wednesday will really determine how the next year is going to see. Okay, if we can expect during 2023, if we can expect more interest rate hikes, or we're going to go into more sideways markets. So we're kind of living history, okay, during these days, and that's why we want to be very focused on what happens around that area. After this week, and as we get into the end of the month, do expect a little bit of slowdown in the market as institutional traders go out for holidays, whatever it is. We tend to see two things: in a low of volume, which creates wider spread sometimes and erratic movements. Smaller money suddenly makes movements in the market, so erratic movements on the technicals, but also a lot of ranging movement, slow volume, a lot of consolidations and sideways movement. So let's go through this week, and we'll see what we see afterwards. Aussie dollar, we have a similar pattern. We had the impulse, and we kind of on the channel right there. Again, after tomorrow, after Wednesday, we'll see if this breaks to the upside or breaks to the downside. So we need to be ready for that movement. We see the channel. This is a very nice example of a compression. We see a little bit of demand trying to be created, but it has been consumed, and then this movement creates a little bit of demand, but it has been tested and consumed. So if there's a movement to the downside, there's nothing here to stop the movement to the downside. Okay, so that's the important reading on these movements. With that said, I think we can go and trade a little bit. So I'll try to go to lower time frames. And also, speaking of the metals and the stock market and everything, depending on tomorrow and Wednesday, if we see more money going into the US dollar, so because there's an expectation of the US dollar to get stronger, we'll see more money flying into the US dollar. So people will sell stocks and go into cash. So we'll see a bearish leg on the stocks. Just take yourself as examples. If I understand I can put my money in the bank and get 5-6%, maybe in the next year 5-6% interest, there's no need to go into the S&P and try to get 8%. Okay, so people will try to go to the solid investments and safe investments. So we'll take money out of the stock market, the risky market, and go into safe market or easier and quieter market, which would be having the money in the bank and getting interest. So tomorrow and Wednesday we'll see important movements in the Forex market, stock market, and eventually that will affect the bond market, the housing market, all markets. Okay, all markets will be affected. So let's keep an eye open. With that said, I'll go to Euro. As I said, I don't expect a lot of movement today, directional movement today. So if we go to the dailies, I don't have a clear bias for today. Probably a little bit bullish as we're trying to get to the supply area. If we go to the hourlies, okay, we see the range we're stuck. We're pressing to the upside, but I don't think we're gonna have a strong break of those levels. So I could either sell the tops or wait for pullbacks and start building up positions. Then I go to lower time frames and look for patterns on this time frame. And from here I try to execute a little bit. Guys, if you have any question, any pair you want to review together, feel free to do that. So that's the 5-minute chart. I'm going to the 1-minute chart. I'll try to build a little bit of a small long position as we get again to little support, or what it seems like demand areas on the 1-minute chart. I want to buy in that area. I want to buy that area. If that area breaks to the downside, I want to reanalyze my trading, what's going on, and I will adapt. So I don't know if this is going to just continue sideways during the whole session. As a consolidation, where I'm buying is not a great area because I'm buying at the at the very middle of the range. So ideally, I want to let this go up and sell, or I want to let this go down and then buy the bottom. But as I see this area right here on the 1-minute chart, then let's see if we can catch a little bit of movement. Andy, how do I manage a trade that's going against me? That's a great question. I appreciate the question. It really depends on the setup. It's not always the same management. But what I tend to do, if I see what I tend to do is I'm trying to phrase my thoughts correctly. Okay. So when a trade is going against me, I need to understand the setup. So sometimes it's going against me, but I'm in the setup. Okay, so for example, let's just take this setup. So I have 2 buying areas that I'm confident I want to be buying inside those areas, which is that one and that one. So as long as we stay above this area right here, let's say, doesn't matter if these trades go against me, I'll keep adding. But if suddenly this breaks down and the market continues down, okay, lower, then I want to start taking some losses. Okay, I'm a true believer of scaling out of losing positions. Okay, so if instead of taking a full loss, I'll try to take partial losses, or for example, if I have 3 positions here, maybe if this area right here breaks down, I might take one of these off for a loss. Okay, and I'll just leave only 2 to get to the lower area. Okay, so I really try to scale out of my losing positions, so I don't need to take full losses. And of course, if the trade is unfixable, then I just take the loss. That's it. So as long as my setup is valid, I add. But if I see my setup is breaking down, then I scale out of the trade. And if it's all there's no hope, then I just take the loss. Okay, guys, I see questions. Let me maybe I'll just I'll manage this trade, and I'll go. We have silver, pound USD, which is analyzed data, and pound yen. We'll see it as well. Okay, so silver and pound yen, we can open those in the meantime. Yeah, so let's Jesus, how are you? The market in December. I just spent a few minutes about that. Very wild after tomorrow and Wednesday, with all the the whole week with all this announcement. The last days of December tend to be quieter, but hard to tell what's going to happen. Okay, but usually historically tends to be a quiet month. Not sure what's going to be this time with all the interest rates announcements. What type of percentage monthly returns are your top traders making in percent return on account? So John, by top traders you mean those managing like higher accounts, the highest accounts, or the best traders? Because there are traders who make 10% in a month, but usually those traders, usually the higher funded traders are not making 10% a month. So just want to make sure I understand your question. Yeah. Okay, I keep reading price, for example, and I see that around the area, okay, this might be the reaction that was waiting from this area, and there was an attempt to go up, and that failed, and now we're pushing down. Okay, so I need to take that into account, because suddenly I'm not sure we're going to be able to break that area in the short term, and these large black bars are telling me, okay, I'm about to break your area. Okay, so you might want to peel down a little bit of that, or slow down, or take some of the losses, right now. So let's see how that keeps behaving. If we see some buyers coming into the market just for an attempt to turn, and if not, I think we'll go all the way to the lower area, and then I will add more to my position. Jones, yeah. So the best traders are return. It's a tricky one, because we have some very talented traders making on small accounts, relatively small accounts, 7, 8, 10% a month return, which is crazy. But we don't see those traders, as they go to higher accounts maintaining those same returns. So on lower accounts, we do have a lot of traders making 7, 8, 10% a month. Those are like aggressive traders who take relatively a lot of risk per trade, but they do it fine. But once that risk becomes a lot of money in larger accounts, they struggle to maintain those returns, and they suddenly shrink their returns. They go down to 3%, 2%, and sometimes they just get a lot of emotions involved, and they incur losses and all that stuff. But in smaller accounts, seems like easier to make those high returns. Okay, I'll take one off. for a loss, because we'll see how this is failing. Now, I don't want to go with the 3 positions all the way to this area, and now I need to wait for the market to to come lower around that area so I can add a little bit more. Now, in terms of if I go to the 5-minute chart, if this is going to be a consolidation, a range, and this is a nice impulse, makes total sense to buy the bottom of the range and expect that bounce to the upside. Okay, so let's see if that happens. Now, I really want to see the market coming into this area. Not adding a lot because I'm not quite at the box, not quite at the area, but I saw this tail and that tail, and hints of bulls wanted to be active. So that's why I added just 1 position in case the turn happens here, but it tends to happen at the area and not before. So just in case the turn happens, I just added 1 position. And let's see how that behaves. Yeah, so that one and that one should be like reversal candles, kind of. But we need I really want to see the turn. Okay. And we see how the buyers are struggling to turn the market. So we might see ourselves all the way at the box. What time I usually trade? I usually trade this session, the US session. I'm more used to it, and for my intraday trading, I get my bias from the dailies and from what happened at the London session, and then I use that as a bias. But some days I also trade the London session, but like my bread and butter would be the US session. Okay, by this time I would really like to see already the turn. The fact that it was not turning, I need to be careful with that. see how many tails we formed and we failed to turn. So the sellers are present. Yeah, so if price goes deeper into the box, I will see how the price forms inside the box, and then I will decide if I buy or I don't. Okay. A good exercise to do is to, hide your trading levels and ask yourself, okay, I'm just opening up the chart, what I want to be doing right now. Okay. So right now for me, selling doesn't make sense, correct? At this point, if I was just opening my chart, I would be buying this area. I wouldn't be selling that area. Now, if I see a break of this area, of this zone right here to the downside, that's a different story. Okay, but right now, my setup would be buying this area. Okay, if I sell, I'm selling at the very worst price. Now, if we break now, we have this area down here, but I'm not sure I want to be keen on that. It's another 10 pips, which is fine. But if we break that area, right there, I'll just need to take the losses for this setup because we're going to go way lower. Then I'll take that loss and then I'll wait for price to come to that area down here, and then I'll reposition myself. Okay. Now this movement on the 1 minute chart is overextended, so I expect like a pullback, a retracement, something like that, and that should be enough for me to get out of the trade, either break even or in profit. Okay, first sign of strength. Let's see if we can have some follow through. What's my stop loss percentage in all trades? So I don't have it like per trade, but for overall position, I will try not to lose more than maybe 0.5% for the overall setup. Okay. Okay, approaching the low of the area. How many times, guys, have you tried to catch the breakout of the sell and you get stopped out? Okay, so I'll try to be in the other side of the equation. Okay, where I try to not sell the breakout, but to try to fade that and to catch the movement to the opposite side. Let's see if that works out. A lot of selling pressure. Suddenly sellers became active. And now it looks there's a lot of momentum to the downside. I will try to position myself in that way that this area here becomes like a break-even area, this line, because I'm not sure we're going to have a turn and a break of that area. So I'll look for, you know, strength signals, and I'll add a little bit. I'm only in 4 positions. I have 2 here at the top, 2 here in the middle. I'll probably add 2 or 3 here at the bottom. So if we go back to the center, I might be at break even. And then depending on how price action forms, we might go even higher and then to profit. Okay. Okay, there's the break. Okay, that's a confirmed break. I need to look for ways to now just fix these trades, and I can allow myself to do that because I have just, you know, 4 positions. But definitely that's you know, a confirmation. Now I really need to switch everything towards the downside. So I'll try to fix those, and then slowly going into transitioning into the sell side of the you know, of the trend, and try to make money on the other side. Okay, but for now, if we break, you know, this area, I'll just take the hard loss for those ones. The 5-minute chart starts to be a bit overextended, so I expect at some point a retracement, and that there's no better area for that to happen than this area right there. If that breaks, whoop, I'll just take the losses. What do you enter those prices? US index being at the buy area. Yeah, we walk through the whole you know, dailies and all the key areas, but then you go to lower time frames and you see different patterns. I'm just trying to scalp, you know, the patterns on the lower time frames. So there's arguments, you know, from technicals. You can make arguments to why go long or why go short at any price. So you just, you know, make your models, and you base your decisions on something, and from there you go and you create your models and your process, and that becomes your, you know, your trading routine and why you trade, you know, either direction. So that's why. Now this breaking area becomes an obstacle, a little obstacle for me, because it's going to be hard to reverse and close above that. So I might take some, if we can go back to that area, I'll take a little bit of profit, and then I'll peel off one of these upper positions, and I'll try to remanage everything, all my whole position. Now, the breaking area, I need to expect the market to test that area and to want to retest the lows. Okay, so I need to be prepared for that movement. That's why I might take a one profit and one loss, just to to reduce exposure on my position. And then I'll handle the rest. Really want to see buyers taking control of this market. A strong bullish candle like this one or that one, and you see how the buyers are struggling to turn the market to the upside. On the 1 minute chart, still overextended into a key level, so I'm just expecting a little bit of retracement, and that should be enough to fix the whole setup. Okay, there's the resistance. If we manage to turn that, to break that, there shouldn't be a lot of problem going into those levels. some follow through now. Okay, I'll grab 5 and I'll take this off. And if we go back again, I'll buy again. I'll keep, you know, reducing my exposure of the trade. Okay, just see the signs of, okay, that's a nice, you know, 5 minute candle, bullish candle. But because of the formation of the 1 minute candle, I need to be prepared for a new pullback and probably a continuation higher. So that's why I grabbed some of the profits and I took off one of the upper positions. And that reduced my exposure to the market. So I'm now just left with 3. So that's the process I'll be following. That's nice movement. You see the tail activity on both sides. The market's struggling to decide where is this continuing to the downstairs or it's about to turn. A break of that level would, you know, should take us all the way to this area, and if we manage to break that one, we should go all the way to that area. Okay, it was pound yen to check, and you know, on the dailies, very balanced. We have the you know, the risk of Japanese yen currency, and we have the pound, which just had news this morning, and you know, we don't see a lot of movement. So very sideways market on the pound yen. I'm not very biased. Very strong, of course. You can see the very strong demand. Going lower that area will be a big challenge. So as long as we stay, if you train the dailies, as long as we stay above that area and that area, you want to maintain a, you know, bullish bias. But of course, getting into some strong resistance that right there, and we have extreme supply at the top. So slightly bullish bias. Remember, we're at resistance and we might be heading all the way to the supply area. So slightly bullish. And silver and commodities, this is a good area. You know, we tend to see when there's uncertainty in the market, we tend to see those strengthening. Again, if we see a lot of money that's going to start flushing out of the dollar, we might see a strengthening of gold and silver. Technically, we should see a test of that level, and we might be heading towards supply, which is up there. So we're just in the middle. There's nothing here. This is a gap. Okay, there won't be a lot of supply here to stop the movement. So we should be going towards resistance or supply. So my bias is also bullish. Very relaxing watching someone else trade, like waiting for return to get yeah, it is. Let's see what happened. Why not put your stop loss here? So I do have, you're right, it's a good practice to have stop losses in place, and at this point I can, I know where I want my stop losses, so I want them around that area. Okay, all of them. And if this is a turn, probably I want my stop losses, around that area, above, below that pivot point. But so I'm very clear what I want to get out of my trades. So I do have my mental stops, and I tend to be disciplined to cut my losses. But you're right, it's good practice to have the losses in place. Just sometimes I get stopped out, and then the movement I was waiting for happens, so I try to avoid that situation. That's it. I would really like to see bullish momentum coming in. If I was just opening my charts, I would be looking for the turn this time. I would be building into short positions. So now I need my selling analysis to fail and my bullish, the bulls to come over this market, to take over this market, to bring my trade in the break even. So you can see right now I'm at break even. So okay, so if I'm not comfortable with the trade, I can just close it. I made a little bit of fixing. I was waiting for a little bit of turn here, didn't happen. I was waiting for a turn down here, didn't come. So from that point, my whole purpose and objective is just to get to break even. Okay, which is, so I added a little bit of position there. I took some of the profits and I took some of the losses, and at this point I'm virtually break even. So if you're not comfortable, if you feel you're overexposed, great place to to just kill the trade. I kind of want to keep reading price action and to see if there's going to be a push to the upside. But overall, okay, not about exercise to fix a trade. Okay. A human martingale? No, I wouldn't say this martingale, because I have very clear where am I taking my losses and am I taking when I'm adding, and when I'm adding I'm not always doubling up like martingale. So there's a huge gap between what I do and what martingale is. Essentially, what I do is just I break my entry points into different entry points. So instead of going all in at my first entry, I divide my position into different trades, and I build into my position, the whole setup, which is completely different than the martingale. Okay, guys, I think we'll wrap up. We had a little bit of everything. We had the analysis of the fundamentals for the upcoming week. We have the long-term perspective of the pairs and a little bit of trading. So yeah, here we have it. Tomorrow Ruben will be here with you, and I'll see you next week, guys. So have a nice one. Bye bye.